So I would say there are three levels of terrible things that can happen to a publicly traded company: declining earnings or declining revenue. That's a bad thing. Hindenburg Report, and then bankruptcy. So if you want to take those three things, Hindenburg Report is much closer to bankruptcy than declining earnings or margins as far as how bad it seems and how bad it sounds to shareholders. You never want to see the word Hindenburg next to the name of a company that you own shares in.
Is that because all eyes were on SMCI and the amount? I mean, SMCI was trading around the 200 to 300 range and shot up to almost 1200 at one point. So is that because all eyes were on SMCI and the growth there that sparked this, James?
No,
Or
no, no. It has not, that has everything to do with the word Hindenburg. So anyone who's listening who's not familiar with Hindenburg, go do some research. They essentially what they do is they do research on a company that they think is committing fraud. And then they take a short position in the company, in the stock, a big short position. And then they release the report and they hope that the stock goes way down. And then they close their short and they make a bunch of money. And that is 100% legal because it's not insider trading. They're not acting with information they got from the CEO or anything like that. Now that they did, it sounds like they did interview some people associated with the company or ex-employees, but essentially one way or another, what they're doing is legal. And this is a well-known thing. This is how these big short selling firms work. So they have previously uncovered fraud in companies that wound up going bankrupt or being delisted from the stock market. So their most famous one is on a company that was essentially trying to be the next big Tesla. It was an electric vehicle company, or rather, I think they focused more on hydrogen vehicles, something like that. And they did a big report on that company revealing fraud, and the CEO wound up stepping down. I want to say the stock is no longer traded. So essentially, you never want to see Hindenburg come after a company that you own. They have put companies out of business before. Now, looking to this specific report, it's definitely bad. Did you have any big takeaways from the bullet points you read on the Hindenburg report, Kai?
no, I mean, more of my takeaways. I have not had a very big. I have traded SMCI occasionally over the last 6 months, but given the drastic rise as far as technical analysis goes, I thought it was a very risky play. I think you've held your position. My takeaways are a few things. One, we don't have all the facts. Okay. My other takeaway that I read, there was a few other concerning features or a few other concerning things is that some of I would call SMCI's biggest customers SMCI has competition in which there was a market that really thought that they owned a large part of that market. So competition is the biggest risk, one of the biggest risks that I see there, excluding some of these other fraudulent things that you're talking about, because we haven't really seen any proof to the pudding yet. The other thing I would say is that these cooling systems, that was one other concerning thing that I read. Basically, SMCI takes these GPUs and builds out these supercomputers, and there's a cooling system that goes with it. I think there's some accusation there that they may have stolen that, right, James, or have taken the different technology. Is that correct?
So there's a few accusations in there that are really significant. One of the accusations that is a big accusation is that there's all sorts of conflicts of interest. There's just like a web of conflicts of interest with the CEO, his family members, companies that he and his family members are associated with. It's like a big web of conflicts of interest is one of the accusations. The other big line of accusation there is Russia. So they're saying that essentially the company is trying to get GPUs into Russia, which to me wouldn't seem that realistic. I doubt Russia is just the biggest buyer of GPUs in the world. I would actually be more concerned for China. If they're trying to slip stuff into China instead of Russia, that'd be more concerning for me. Now, there was something in there about liquid cooling, but Hindenburg also tried to take the line that essentially they're providing crappy products, like their servers break down. There's a very high rate of failure. So I have issues with a number of these, but before I tell you my issues with some of these accusations, I should tell you that JP Morgan, who's significantly more important than me, came out and said essentially what you said. JP Morgan came out and said that these claims are quote unquote tough to verify and largely void of details around alleged wrongdoings. And some of these things are just historically known. So there was an accounting problem years ago. Actually, one of the things in the Hindenburg report went all the way back to 2006. So they're calling up things from 2006 here. Obviously, SMCI has not done a great job with their accounting. And right now, as of I think today, they're delaying one of their reports. So there are real issues here. But the question is this company going bankrupt? And I can answer that. But what were you going to say?
Well, number one, my thoughts on a lot of these things are that when we see a drop like this, there's probably an element of overreaction. I also thought that some of SMCI's fervor in regards to how fast the stock shot up was overreaction. My co-host here said that they were going to take off the train tracks and fly into the stratosphere. And I was kind of like, hey, let's pump our brakes here. I do like SMCI as a company. I think that the next quarter or the quarter after that, earnings will start to tell the story. I also think let's wait till SMCI actually throws out their numbers over the year. And then we can make our decisions financially. There is no reason to overreact to a particular report that those people made would also benefit from on the short sales of. SMCI was one of the largest shorted positions, I think, over the last month or two. So, I mean, especially over the last 6 months. So there's a lot of people that are going to make a lot of money off of the shorts. And when those shorts start to take profits, we also will see, I do expect to see a little bump in SMCI. So a lot of, one person's 20% drop is another person's buying opportunity. I'm not saying I'm going to take a position in SMCI right now. Will wait until I kind of see what happens over the next week. I expect a little bit more drop tomorrow, potentially the next day, but at some point, SMCI, I mean, I still hold to my price target of 800 to 1,000. So depending on the numbers, and their EPS was like 6. I mean, there was a miss there, but they are showing revenue growth and still revenue. So
Yeah. So a few corrections there. Number one, this is not just some report. This is a Hindenburg report. Hindenburg reports are oftentimes extinction level reports. Okay, this is the best short selling firm in the world. So it's a really, really big deal that they've done this expose. They do an enormous amount of research before they write up one of these reports. Number two, their current valuation. So you talk about, are they fairly valued? How much is the drop in? You mentioned a 20% drop. The real drop is 67% from peak to trough. So they've gone from around 1,200 to the low today of 397. That's a 67% drop. So what causes a stock to go down to 67%? What's the valuation right now? Is this company going bankrupt? Should you buy it now? Yes or no? Let me just address a few of those things really quick. So first of all, this company does not make a fraudulent product. A company that should go bankrupt, a company that will be put out of business by government action is typically something that's making a fraudulent product or selling a fraudulent service. So if you think about that lady who used to make the fake medical tests, I don't remember her name, but there was a young entrepreneur who started a company, went public with a company that was doing fake blood tests. Well, they went out of business because they were fraudulent. There's legal. She went into court and everything. Well, SMCI is not selling a fraudulent product or service. I'm not saying they have the best products or services out there, but they only have two competitors, Dell and also HP Enterprise, and they've been doing this in like the GPU racks. They've been doing this better and longer than some of those other competitors. So they're actually better placed to succeed from AI. And let's talk about their valuation. So we've said previously, man, it looks like valuations for AI stocks, maybe they should be around 30 to 36. Well, what is the valuation of SMCI on a forward basis right now? 7. This is unbelievable. Okay, so we've had a 67% rundown in a stock that was pretty fairly valued when it was above $1,000 a share, which is why I was bullish on it. And now we're looking at a forward P of 7. Let me just say this. A company doesn't sit at a forward P of 7 if they're selling the best product in the world for very long. So once a company gets to a P of 3 to 5, it's got to go one of two places, either straight to bankruptcy or it has to recover and double. So once the stock gets to, like, let's say 300, it's around 400. If it got to 300, that would put it at a PE of around 5 instead of 7, talking about $50 per year for earnings. So once again, if it drops from 400 to 300, It's at a PE of 5. From that point, there are so few companies. I'm not just talking about tech stocks. I'm talking about the worst company, like Ford GM dropped to a PE of 6 or 7, and they have gone back up from that PE. You know, when they had labor unions that were hoping for bankruptcy, or labor unions hoping for huge raises, and everyone was expecting maybe one of them could go bankrupt, they were at a PE of 6 or 7. And now we've got SMCI at that PE. So look, the PE goes much lower. From that point, it's either got to come back up or go bankrupt. And this company is not going bankrupt. Even if Nvidia stopped working with them, there would still be people buying servers with AMD or Intel processors. I mean, it's like it seems to me almost ridiculous to see this company at a PE of 7. The fraud would have to be greater for it to. I just don't see it. It just doesn't add up to me.